Hey, how's it going? Today I'm going to be talking about hedge funds and what that is. Hedge funds is an investment vehicle that pools capital from accredited or institutional investors and employs various strategies to generate returns. Let's take a look at some of the characteristics of hedge funds. Investment strategies. Hedge funds can use a wide range of investment strategies to seek returns, including long and short positions in stock, bonds, currencies, commodities, and other assets. They can also use leverage, borrowed money, to amplify returns and diversity. Ooh, that sounds risky, but perhaps it's something that they would always keep as an option, and diversified for hedging and speculation. Either way, so if you were to find yourself at any point to have a lot of capital available, you would be there to consider all the options. Hedge fund is one of the options that, but there are a number of options, and you should consult with legal professional or accountant. What's the best way to optimize your money, and what's the best path, if anything. This video is for entertainment and educational purposes only. To understand all the vehicles out there, how to allocate perhaps any additional capital that is something that you might be interested in, and to get your money work for you. Hedging. The term hedge is hedge funds originally referred to the ability to both buy and sell assets to reduce risk, making them theoretically market neutral. There isn't such a thing. So this is what I have read. It's not something that I believe in. I think that there's a risk involved. Everything, there's no such thing as market neutral. There's a risk involved. If anything, you need to do your own research and understand that risk, especially when you're allocating your hard-earned money, right? However, many hedge funds today engage in a broader set of strategies, not all of them necessarily hedge against market movements. Either way, so there's a risk involved, even as the best teams out there that might have the best staff on board, have the best strategists up there. There's still risk involved. There's no such thing as a neutral or markets, anything like that. So I don't know what others are thinking, what they're trying to convey with those messages, but there's a risk involved. Flexibility. Hedge funds often have more flexibility compared to traditional investment funds like mutual funds. Hedge funds, they can invest in wide variety of assets and use complex trading strategies. Again, they might have, I'm not entirely sure, so compared to passive and perhaps active investment. So they might, overall, this particular vehicle might be offered to you more flexibility, but either way, try to understand yourself before making any financial decisions. Management fees and performances fees. Hedge funds just typically charge both management fees, which are calculated as a percentage on assets under management, and performance fees, which are a percentage of the fund's profits. These performance fees often have high watermark, meaning the fund managers only earn a percentage fee when the fund returns exceed previous high points. I guess there's a different way how watermark. Either way. So depending of, you should understand all the options of that. So currently I'm covering one option, but you need to understand all the options. Passive investment can be perhaps 2%. Active investment can be 6%. So it depends. The numbers that I'm sharing are fictional, so you need to understand everything well before investing, right? So active investment, as well as they would take not enough that there's something that they do that you are paying for. They would take percentage of any good investments that they make, right? So that's not enough. They would take another percentage. So I guess they want to get paid twice, right? Which is a very interesting strategy overall. The way how they're looking to work with your money. I'm interested in all this space. So if I were to manage any people's money up there, Some of the funds up there might take 1%, 2%. So if I were to do it, I would take perhaps 3 times, right? So if I can, charge people who money I'm managing. If I can, I would charge 5, 10 times because I'm a business person, right? But what's important for you to understand what's actually happening. Accredited investors. Hedge funds usually cater to accredited investors who are individuals or institutions with certain level of wealth and sophistication. Because otherwise they not necessarily would be able to acquire that wealth. So they have to have industry know-how how to acquire that wealth, as well as a larger, smaller group that you need to work with, so less admin. So you don't necessarily need to manage 20 people, you can manage just one person, as well as that person might have more capital available. So this is what they cater to. These investors typically have higher net worth requirement and may need to meet specific requirements depending on criteria, on your territory, where you might be based. Regulations. The regulations of a hedge funds varies by jurisdiction in the United States. For example, hedge funds are subject to Investment Company Act of 1940s and the Securities Act of 1933. Oh, so it sounds very old. That sounds very old. That sounds very dusty. But either way, with but if anything, and takeaways, right? So that would be more business being done on paper. So there are all different options where business can be done digitally, instant. So not necessarily I agree with any of those vehicles. I'm not saying this is better than that one. What I'm trying to do, if anything, I'm trying to understand myself and perhaps share some information with people who might be interested, as well as some of the digital platforms up there. There's a lot of issues with currently with some of the systems up there, as well as people doing business digitally. Instant, not necessarily good. Instant, not necessarily good. Sometimes, especially when we're talking large sums of money. I agree with a lot of people who are saying sometimes some of those things need to take time. I agree with those people. More time goes along, the more I live on this planet, the more I'm starting to understand that sometimes things need to take time. Especially we're talking about millions, right? We're moving millions from point A to point B, assessing some of those investments and all of that. Sometimes not bad. It takes a little bit longer. Perhaps I'm starting to agree with some of the people on that, which either way, which imposes certain requirements on them. Regulations may also influence factors like a level of disclosure and transparency requirements. Risk and complexity. Hedge funds are often considered riskier and more complex investments compared to traditional options like mutual funds. Their strategies can be highly leveraged and speculative, which can lead to both significant gains and significant losses. So it's something, if anything, you need to constantly think about how you can mitigate risk. So if anything, any takeaways, there's a risk involved, especially when allocating some of the money. Again, that's where myself, I would like to perhaps for people out there, perhaps younger audience out there, perhaps instant decisions, not necessarily good decisions. The takeaways with it, but sometimes about some of the decisions you need to think about, right? So. Get out of your bed, take a letter, write down on the paper, to go to the news post office, buy a newspaper. Perhaps I understand some of the people out there and how decisions used to be made and how you can make some of those decisions right now by perhaps press of the button. Minimum investment requirements. Hedge funds may have minimum investment requirements which can be substantial. This requirement is often in the hundreds of thousands or even millions of dollars, or yourself as an investor having access to some of those vehicles. Not necessarily you as an individual would be able to have access to some of those projects up there on the market, such as some of the projects that's even happening right now. You as a person not necessarily have access to those, but if you were a hedge fund or if you were to manage different investment vehicles, you might have access to a larger pool to choose from, right? I'm not entirely sure what's happening currently. There was a lot of news recently about some of the ways how things have been managed right now. in particular with U.S. market, but so it's just something worth mentioning. So people might know what I'm talking about. Don't want to get in trouble, but yeah, it's just worth mentioning some of the way how people are doing business right now. Perhaps that's more of the older way where just small group of people can manage large sums of money, right? So perhaps different opportunities out there, and again, that would be moving from paper to digital. That might have less oversee of a small group of people, where it could have large implementations into how business are being operated. You can find this book in the description below, as well as Top Retailers has it. I have published this book to help you understand a little bit better where to begin when starting your own first business. This book is focusing on the livestock enterprise and where to begin when starting your own business. In particular, how to achieve first milestone, that will be from zero to first 10,000, and how you can achieve that. I'm sharing a lot of examples that can potentially offer a lot of value to you if it's something that you are interested in, and potentially that can offer a lot of savings down the line. It's same principles might work for different things that you might be interested in doing, different businesses that you are interested in launching, and how you can operate those businesses. But in this book, I'm sharing a lot of information about the practices and everything for livestock enterprise. You can find this book in the description below, as well as Top Retailers has. It's important for potential investors in hedge funds to truly research and understand the specific strategies, risk, and fees associated with particular fund. Due diligence is crucial, and investors should consider their own risk tolerance and investment goals before committing capital into a hedge fund. Thanks for watching. I'll see you next one.